Record. All right, cool. Thanks. So from the daily chart, there's no news really today. We have a couple of speeches. I think there might be some housing data, but that came out earlier. And so if I go and check the daily candle, I have a lower low. It's a green bullish candle. It's attempting to make a higher high. And if it does so, it will be an outside range. What's the probability of that, right? Let's measure what the existing candle looks like. 60 pips. The average is 78. So we have another 2 boxes to go. Are we going to add 2 boxes to the top? Or are we going to slowly drift down and add 2 boxes to the bottom? Right. So we need to go and check that out on the hourly chart. And then from here, you want to start drawing your ceiling, your floor. You need to start determining where your risk is, right? So if we break this, we might be going higher. If we break this, we might be going lower, right? And then ultimately, I think our goal is to go down here or even lower, right? And the reason why I say that is, let's just take a bigger look here. This is a consolidation, right? We're trying to determine what it is, and then we have to trade the facts as we see them for our session, right? Our session is what determines what we do. The trend either helps that or kind of interferes with our progress. So we're not trend traders. That's the key, right? That's the ultimate goal here. We are the trend. Somebody that tries to catch this will lose their shirt here. And this is where we make our money, right? So we make our money here while everybody else is trying to catch the next big move, either side. We don't care. We think we have a priority, we have a dominance, right? So we trade the facts, but already we've highlighted the floor, we've highlighted the ceiling. And if we go and check that out on the 5-minute chart, right? So now that we've built this ladder and we've determined the likelihood, we have to play that, right? So coming to the 1-minute chart, if I come to my computer just now and I'm looking at this big move here, I want to measure this, right? So I would take my box. I see this leg down prior to my arrival moved 2.5 boxes, 2.5 boxes. And since this low, it's gone back up 1.5. And if I'm a seller, this would be a good place to sell right here, right? Resistance. So let's draw a line there, right? Somewhere in this zone around here, I would want to take a trade, right? So I want to size down because yesterday I realized my size was way too big for this size of account. According to yesterday's track record, we did 14 trades. All of them were wins. And let's see what we can do today, right? We're not trying to beat yesterday. We're just trying to see if we're in line with the average we've started to create, right? So we know we want to be sellers in this area. I'm just looking for an expensive candle to sell into, right? I need to see a green candle to be a seller here, right? So I have my ceiling, I have my floor, I have my risk limited on both sides. I have an expectation for one direction over the other. And ideally, if we don't break above 09, I don't have to execute this alternative plan, right? But if we break above 09, so if we break the upper resistance up here and we do go higher up, I have to protect whatever I built down here, if I built anything, right? So the protection, this idea of fixing, is all because something's not working. And so my bias being short, I want to sell. If the market pushes up and it pushes into box number 4, the whole premise of boxes 2, 3, and 4 is because my original trade did not work. And right here, there's my trade. Oh, right here, my original trade in this box. This is my box number 1. Right, my box number 1 contains trade number 1. And so from this position here, I'm allowed 3 boxes on top of this, if I have to, right? And that takes me to my stop loss. I hope I don't need to go there, right? So if my bias is correct, if my top-down analysis is at par and probabilities hold true, I'm able to make money in this box, and I'm in trouble if I go into this box. And trouble means seek breaking even, right? Look for an exit, look for a cheap loss. It's all about managing the loss. It's not about chasing the money. The front end, right? My taking the trade at resistance, that's the best that I can do. Once that trade is open, the probabilities are set, I'm on to my next trade. Right? The market will take care of this. If the market doesn't work in my favor, I will take care of this using box 2, box 3, and box 4. Okay, so I'm not trying to make $1 million. I'm trying to do speculation without losing my shirt, right? So it's all about sizing small, expecting small returns, and then repeating that a few times, right? So it is possible that it breaks higher, right? There's nothing that says, you know, the market must do something. We're just using the probabilities that because we're at the upper end of the range, the bounce is more likely than the break. And then if you look at the macro environment, uh, the likelihood that the U.S. ends the week on the back foot, whew, that would be a low probability. And so you have to see the bigger picture and then trade the facts. And then for us, depending if you're trying to trade, some of you that are trading in the European session and are still here talking to me right now, you've probably been trading for 6 or 7 hours. And that's a problem, right? That's over trading. That to me means you're trying to catch a trend, right? You're trying to go for one direction for ultimately a long amount of time. What we are trying to do here is stack 2 or 3 boxes and then do it again in the opposite direction, back and forth, back and forth, back and forth, right? We don't try and play ping pong until it's time, right? So we play ping, 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 then we play pong, 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 pong. It's this idea that we play a range within a range. And ideally, our 1-minute candle itself is a range, which pays you 3 pips if you locate the entry at the right spot, right? So it's this sniper rifle in the box. The boxes give you the environment that you're trading in, and the 4th box tells you when everything is no longer valid. Things are starting to slip away from you, right? And in our mind, it's all about managing that move away from the entry. There's a system we use, engineering the exit. We spend a little bit more money just in order to move this break-even line, right? That white line here, break-even. That's the average of my trades, right? So I have 2 trades open. I'm averaging on the white line right there. And so there's not far to go. We're 9 cents away, 30 cents away now, right? So it's moving in the opposite direction, but I'm still in my box. And according to our measurements, right, this is 2 boxes from the bottom. And that so happens to be my box 1 because I have my trades there, right? So I'm allowed 3 boxes from this location, right? So in this box here, it's my job to sell expensive candles, right? So like this green one right now, I missed it again. Oh, and we just made a little bit of money, right? So if I can see green, I will take that trade. If not, I will go into the next box and take the trade there. That's close enough. That's a big rejection right there. So I took 2 trades there. All right, and I'm still in my box. Oops, let's give myself some space. I'm still in my box, and I sold when that candle was green right here. Right? If it goes greener and higher, I sell more. I have clicks to spend in this box. My hope is that we find resistance somewhere in this area here, or maybe a little bit higher, somewhere in this zone. I might be able to click a couple more. All right, so a light calendar for today, but I think next week should be pretty eventful, similar to what we experienced this week. Volatility, a lot of whipsaws, a lot of consolidations. Consolidations is the swing trader's worst nightmare. Right? It's anybody that's trying to trade the trend or a trend of some kind gets interrupted, and we take advantage of those interruptions. Right? Consolidations are sandboxes. Today's consolidation is a wide range. It's about 60 pips, right? From 820 to 880. And so we have a lot of space in here, more than usual. Right? So just a few pips here and there. Conservative trading, right? We're not trying to break world records. We just want to be consistent and happy with our performance. It's the control that I seek, right? I want to remain in control. I don't want to put all my eggs in that one basket and then hope to cow that the market will work my way, right? I don't want to be left wondering what happens next. If I can control what happens to me, I can either appreciate the outcome, or at least I have somebody to blame, right? Me. And that's, I think, the key. We have to take ownership of our decisions and then have a solution to our problems. We have to create this idea that you will find a way out. So you probably will need money to execute that way out, right? Don't put it all in box number one. Then the recycling is what makes us money. We're trying to leave the casino before the casino catches up to us. Things are working favorably. We're closing trades here and there, slowly but surely. Right, when I switched over to 0.01s, we're now making dimes per pips. Yesterday we were making 50 cents per pip, right? Because I was running 05s, not thinking. And so just for the sake, we've added 2 trades to our record already. Average trade remains the same pip size, right? 3 pips. But the value of the trade will start to lower because I switched the size. Green candle, I'll sell. You can see how the white line moved up, right? So now I'm within 3 pips or so of breaking even, right? Making a little bit of money. If it pushes up, my job is to generate this exit, right? Create this closer break even, right? Right there would be a good place to add my last trade. Oops, right there. Right, so now I have my 4 trades in my one box. I have to wait, see if I can recycle some of these, make a little bit of money. If that recycling doesn't work, I end up into box number 2. That entitles me to 4 more trades in order to create an average with these 4 trades, and the average combined is now my new exit. Right? And I'm seeking this exit. I'm trying to get to that white line or better. And so if I spend all my money in that one box, that one line will just stay put. Right? So that the clicking of the trades, the taking of the trades, the actual entry of the trade, this is when you're trying to be executing as good as possible, right? You want to be the best trader you can be at resistance, at support. That's where the patience comes in. The execution uh, pays off. That one, that waiting for that 10 extra seconds and that proper location typically will pay you on the next bar, right? If you're at the wrong end of the candle, you might actually carry that trade for minutes, if not hours. Right? So this is, I see that a lot with my own trading, and that is even more important when I'm over trading, right? I notice the trades that shouldn't have been there are usually at the wrong spots. They're like uh, knee-jerk reaction. Right? I don't want to have knee-jerk reactions. Right? Okay, so a little bit of drawdown. Right? This is normal. We're using drawdown to build that position that we're looking for, that will ultimately pay. If we're right, we will get paid with these trades. Right? It's a matter of time. And then if we watch it and it behaves the wrong way, so it keeps on going and going and going and going, we have a job to do, right? It's not for us to sit there and say, oh my God, what have I done? We just have to execute the next best thing, right? That could be closing trades, it could be adding trades, right? It's all about managing that breaking even. You're in control of that number. And depending on which platform you're using, this is an indicator that comes with the platform. Under indicators, custom, it comes up here, break even. I just discovered this last night. MT4, I have a tool that I can give you guys. Okay, sorry. Is there ever a time that you remove the take profit that are before the break even so that they don't? Yes. Yeah, yeah. So if I'm in box four, or for example, box three, I'm really looking for that break even. Like that becomes the ultimate goal, and so I will be putting the take profits on the opposite side of the break even, just to make sure boxes 3 and 4 don't move the break even line. Right? If I start closing trades in boxes 3 and 4, the break even starts to move away from me. Right? So yeah, that's a good question. Yeah. Uh, the idea of boxes 2, 3, and 4, it's because my original trade got stuck, right? I did not make my 3 pips. So I have to find a way to fix this. And so that's the idea with the other boxes. Within this first box, I do have the luxury of using 4 clicks. They're not to fix each other, but they're to make money. The next box, these 4 clicks are meant to fix this box. Right? So I'm trying to make money while maybe holding on to a little bit of drawdown. And it's only when I'm in box two that I now can deal with the drawdown and typically come out with little to no loss and make money sometimes. Right? So it's this idea that the trade, the entry, once it's in the market, once it's open and the market is in control, it's not connected to the exit. Right? The market controls what will happen next. You can interfere with that by spending or removing what you've spent already. Right? So it's us controlling what's there. We're not trying to change what the market is doing. We're trying to we're trying to put our way, we're trying to put ourselves in front of it. Ah, there you go. Yeah, interesting. MT5 also, for those that don't know it, if you use the tick chart, at the bottom of the tick chart on MT5, at the very bottom of the tick chart, you can put in your stop loss, your break even, your size, and you can use that as your trade manager. Right? So MT5 has a trade manager built in. MT4 is missing those fields at the bottom of the tick chart. So yeah, interesting stuff out there. It's still attempting to break higher. The next move up, if it does go up, we're looking at 945 or so, 950 in that neighborhood. And I'm thinking we might see that next week, right? And so today being a Friday, it would make sense in my mind, anyways. It would make sense that we, oh, sorry, I changed the time on the wrong chart. It would make sense that we pull away from the high on the Friday, right? And just kind of stay in our typical range, the range we're in right now, right? This is only Friday. There's no news on the calendar. There's no major event on the catalyst. There's still two wars ongoing. I think the US is still on top of its game on a Friday afternoon, right? So we have to be careful here. We can't expect the euro to take off to the moon, right? So even if it does break higher or make a slight higher high, take it like a trick. It's an illusion, right? So we'll see. We'll see in due time what will happen to us in the next little while, right? Let's go back to my 1 minute chart. Which which box are we in? We're still in our current box. I still have my 4 clicks in that box, and it's moving in the opposite direction, right? So what am I going to do here? Right, so now if I go in this box, let's figure out, I have a level here that I can execute. I have a level right here. Oops. Right here that I can execute. Right? So I'm planning ahead, plan B, right? I'm creating this alternative in my mind. If I'm forced to go into this upper box and spend my extra 4 clicks, I'm now moving this white line up, and my goal will be to try and bring it somewhere between the two boxes. Right? We don't have unlimited money, and so we have to spread it evenly. We can't put more in one box versus the other. The only time you get the opportunity to do that is if you have a remainder, right, from prior boxes. And so if you only put 3 in box number 1, then maybe you have 5 for box number 2. Right? So it's this accounting thing. You have to keep a balance of your risk and where you've spent it. Right? So yeah, it stayed confined to the box. Right? So our measurements are pretty accurate. Right? If I put this box here on that wick right there, and this box on the breakout right here, this entire move was 2 boxes to the pip. Right? And it seems to be holding. And so my trades in box 1 are still valid. Right? This is my box 1. And so I'm just getting ready in case we do need box 2. Sorry, I'm sipping coffee in your ear. It's good coffee, though. Come on. Shazam. Right. When we look at the dollar index, it's at support, and so we have to be conscious of that, right? We can't. If this is the dollar index, let's put it on the 4-hour chart. If we put the dollar index on the 4-hour chart, we're clearly at support here, right? And we're looking to see if this will break, right? If this breaks, the euro is on its way to 109.45. If this holds, the euro is coming back towards 820, right? And when I look at this, the precursor to the dollar index, the yields, which drives the dollar, uh, that looks bullish to me. And so I have a feeling that this will turn bullish. And the bonds are going down, treasury paper is going down. It's an environment where the US is still trying to be bullish today. And so we have to be very, very cautious, right? The euro is unlikely trying to go to the moon. It's a trick, it's an illusion, right? It looks the most bullish before they pull the rug, always. Yeah, it's a different box on the dollar index, right? So all the instruments have their own boxes, and all the time frames will create their own boxes. And so what I'm using, this box that I'm using here, that's created on a 5 minute chart. So I'm using a 5 minute range or 5 minute price action. I measured the 5 minute swings. We averaged those 5 minute swings. It created this box, and we're using the box on the 1 minute chart because otherwise it should only have 12 bars in it. See, there's only 12 bars in the box. That's not enough bars for us to trade, right? So when I look in with the 1 minute, now the box is 60 minutes long, and I have many, many, many opportunities to spend my 4 clicks. Yeah, well, you could do that. That's the dirty way. That's the dirty math way. That's your mind's eye just, looking for an average. If you want to do it mathematically, you have to measure the swings, like I showed you guys on the whiteboard. All right, so there, it you can just throw a set of Bollinger Bands on there, and you'll get the same measurements, right? That's the problem. Well, it's not really a problem. The definition of standard, right? Standard deviation is what we're exploiting. And when you're using Bollinger Bands, the standard is fluid. What we've determined is one number, the top of the bell curve, and then we allow for shoulders. Right? Still testing towards the high. We don't know if it's going to break or not. Nobody knows, right? Nobody knows until it actually happens. And that's why a lot of people will fall for this trick, right? They'll chase this. Oh, it's going to the moon. It may be going to the moon. And that would be the one time that they're right, right? But the other 70 or 80% of the time, it's a bounce. And so I'm prepared to play the bounce, right? I aim to play the bounce. And if push comes to shove, I'm ready, able, capable of solving the issue, right? Because I've not spent all my money. Right? We have to be careful because sometimes the illusion is, it's not as obvious as we think it might be. Right? Inside swing, testing the inside of that range right here, the inside of that swing. Right? See if this holds, we are going back down again. If this fails to hold, we're going to test the top. And right here, I want to take a trade. Right? So I'm moving my average. I'll take 2 because I'm in box number 2 and I'm allowed 4 clicks there. So I just move my box up. If we go up to this line, I'll spend my other 2 clicks and bring the line somewhere between the 2 boxes. Right? So the premise is to have this bigger picture in mind. You're trying to devise a way of getting there. Right? So testing the high. If we go to a higher time frame, uh, something like an hour or a 4 hour, it looks like a triple top. Right? So is it really a triple top? Well, we can't call this a top until we break the bottom of the range, right? So this could be just a sideways range and a breakout. And we don't know what's what until we live through it. The bigger picture, if we go to, let's say, an hour or even a weekly, right? Right here, we are at the very, very extreme, right? We're into that zone right there. All of that. Look at that rejection right here, right? This is what we're pushing into. We're pushing into that rejection, right? And people thinking this is going to the moon, they may be right, but we have to go through all of this stuff. This is not going to happen instantly, right? This is going to take time. It's going to take many, many pushes, many, many attempts, many, many failures. And we can take advantage of that situation, right? Look at what's happening here. We have a lower low, and we've still unable to make a higher high. And we've done how much today? We've done 81% of the average daily range. I'm looking at my MT4 platform. It keeps track of the ADR. Right, so we did 60 pips so far. So there's a balance, right? There's money left to be made here on this daily candle. And our approach is to assume that it's not going to run away from us, right? We're testing this area here. Rejection, 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 right? And so it's this intent. I'm digging my heels in and I'm spending my money in order to capture swings that ultimately should end in my favor, right? It's the building of the position that's so scary, like putting all that money on the line, one click at a time. What if it doesn't work? Right? That's the fear that's running through our brain. But after doing it a few times and after watching it work, the probabilities play out. You can take a sigh of relief. You can actually breathe a little bit, and when the problem shows itself, rear its ugly head, you can actually have plan B already figured out. Right? It's the fear that gets us into trouble. Stuff like this right here, right? That's a disaster in the making, right? Sell. I have one more click left. I'm at 7. Right? So I'm trying to move my box up. Sorry, I've got stuff on my other platform over here that's running on my side. There we go. I'm just freeing up some margin. I have one click left. I'll take it right there. Expensive candle, slowing momentum up. Right, so I'm just taking advantage of the top of the box, right? The area near the top of the box. I've moved my line within 10 pips, right? So I'm one box away, I'm one pullback away, I'm one little retracement away from where I need to be, right? Time of day, right at the bottom of the hour. That's usually where we find a bullish or a bear pullback, right? So situationally, I've done the best that I can. Oh shit, I didn't want to change the box. Yeah, situationally, I've done the best that I can, and I spent the money to exploit the next move, right? So the next move is expected to be something like this. If that doesn't play out, well, guess what? It's going into box number 4 from the bottom, but it's only box 3 for my money. right? So I'm still participating, I'm still moving my average, I'm still looking for a way out, right? Ultimately, I will find my way out. This is Friday, right? And I'm not here to be at risk over the weekend. I really want to be risk free if I can, right? So hedging might be required, or taking losses just so we finish the day, right? We'll see what happens in the next 20 minutes or so, right? We may experience the pullback we're looking for. It's still pushing towards '09. This is the scary part, right? Spending money in the box, knowing that it may not work out, right? The probabilities. The probability is what we're testing. Right? If we go into box 4, I lose 2 trades. We should be right around the area where the turn could come in, right? When we look at the bigger time frame, we're right around here, right? Let's draw the line there, right here. Right? So for some people, the pain is being felt right now. For a lot of people, they're getting into their trade, right? We're going to the moon, apparently. Situationally, you have to look left all the time, all the time, all the time, all the time. And then think of this as the memory of a goldfish. The further you go on the 1 minute time frame, the further you have to go, the less probable it is, right? So at some point, you end up in box 2 because that probability slipped. So now if you look at the 5 minute chart, you're going through your ladder. Remember that ladder we built earlier? We're moving through it, right? Boom, 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 boom. And now we've just made a new high for today, right? We're still positioned for the next move. The positioning is what we care about, not the trend, right? And even if there is a breakout, we will learn to fix it. Right? When we hit the bottom overnight, in the middle of the night down here, when we hit, down here at the 820 mark, 825, 820, if we look left, the bigger picture that is support, anything looking below that is questionable, right? This is when you start spending your boxes and, may or may not get into trouble. See what's happening here? It's the same thing that's happening here, right? And people that don't look left, they don't see this, and they only think the moon is their destination. And when it's pulling back like it is right now on schedule, we want to appreciate some of this. We want to take part in that because we know we can profit from it, A, and B, we can manage the risk, right? And it's actually A, we can manage the risk, and B, we can profit from it. And so it's because we've determined where the probabilities are, right? We're not playing at random. We're building a position that requires time, a little bit of logic, a little bit of skill, and in some cases, volatility. Like you want implied volatility. You want something to help you along. Right? For me today, Friday, I expect a slow drift downward from the high, right? But we're testing for the high. We're trying to find the high right now. Let's go back to our daily candle. And I can turn off all these lines, I think. Orders and positions, yes. So if I look here, we're still trying to push higher, right? We're still trying to create an outside range, right? Lower high. If we make a higher high, it becomes an outside range, right? We've already broken the low. We're now trying to break the high, right? An outside range would highlight bullishness, right? That may be the case, but the facts tell us that we're at the upper end of the range. And as a range trader, this is a sell zone, right? So yesterday, when I left you guys at evening time, we were selling into the bottom. Now we're trying to sell from the top. Okay, so we don't want to be, we don't want to fall for the trap. We don't want to fall for the illusion that it's going to the moon. And so this is the problem we will always have, right? It's this fear of missing out. When everybody is trying to buy at the very, very, very top, we want to be the one selling it to them, right? And so that takes a little bit of the gumption, so to speak, right? You have to have the willingness to sell it at the top, right? And that's that's what we were told not to do, right? Apparently the money is there. Don't go there. So we'll see. It's time, right? Time, practice, experience. I don't know what the next bar will look like. I can only tell you what I'm going to do about it, right? And this what to do about it being the bigger picture, right? I'm trying to build this bigger picture. I'm trying to figure out where the top of the day is, right? I'm trying to short the top of the day. And I'm assuming we're near it because of what we've done so far this week, right? So I'm looking to my left. I have levels that limit my risk. I define my risk. I play that definition as I see fit. And I use boxes to count my way through, like to measure things like you would measure a recipe in the kitchen, right? We need to measure the volatility and then be aware when we're, out of money or in the money. It's the fear of the unknown that keeps you from doing the right thing. And a range trader, the right thing means selling at the top, right? It's very seldom that we will participate in the breakout, right? So a breakout means, for me, a fix down the road. Okay, so box 3, top of the green candle here, I'm selling this. Right, I'm at 10 trades now. We're so near the top. One last click. I'm at 11. I have one left. Yeah. How big is this move? So far, 34. Remember at the beginning of our session, we were counting for 2 extra boxes, whether at the top or at the bottom, right? So that's kind of what we're expecting to find, right? Somewhere along the way, we're going to get 2 boxes. And it looks like it might be coming from the top side, right? We're still unable to break that previous high, right? We're still unable to make a higher high. And I think that's what we're holding on to. If the price goes up a little bit more, maybe it's a stop hunt, right? Who knows? Who knows what's unfolding here? We have our system, our rules, and I'm committed to my system and my rules. And so I just do what I've been trained to do, win, lose, or draw. In the end, after a million trades, the statistics lean in your favor. And so it's this idea of that I must survive whatever happens right here. Even if it's a losing trade, I will come back tomorrow and trade again. Right? This is the part people forget. Right? Resistance is what we target. Support is what we target. 99% of everybody else is looking for a breakout above that. They may be right. They may be right. Yeah. A slightly higher high would take out a lot of stops. Yeah. Something like 1 or 2 pips above here would be damaging to a lot of people. Okay, so we're booking profits finally. It's been a while. So we've closed trades. I've freed up trades. I'm still in box number 3. I'm still allowed 4 clicks in this box. If I get a green candle, I'll take a couple that are allowed to be here. Yeah. Building a short position when the candles are bullish like this is scary. And this is where trading takes control, right? You have to control your own emotions, your own behavior, your own psychology at those extreme levels. This is when everybody else is panicking. This is when everybody else is either jumping the gun or jumping off the ship. And we have to more or less help them do whatever it is they're thinking of, right? So the range holds until the facts tell us otherwise. And so we have to assume it will hold. And we have to sell all the way up to pip 35 because we still have room, right? We still have the probability is still on our side. And there is that threshold. There is that that area in box 2 there when you're debating with yourself, should I close it or should I fight for it? In my approach, because of time of day, I tend to fight for it. When you guys are trading the European session and you're likely going to be faced with the trend of the day, you're probably better off taking the loss in box 2, because if it's not stopping, it may go 6, 7, 8, 9, 10 boxes. And then what are you going to do, right? So for you guys that are faced with a trend every day, try and be wrong in box two, right? Lose in box two. Those of us that are trading the extremes of the candles, right? So the Asia session or the North American session, we tend to fight for it. We tend to put in the 4 boxes expecting that wick to pay off, right? That's what I'm doing right here, right now, right? I'm looking for Friday's wick, right? I'm looking for the wick on the Friday candle right here. And if the wick pulls back below my white line, I make money, right? And that's my Friday done, finished. If I don't get the wick, so if we break the high from yesterday, I'm in trouble. And this is where the fix has to come in, right? So it's understanding where we're wrong and then what to do when we get there. We have these tasks, we have a schedule of things we can work on. 99% of the other traders don't care for that, right? They're hoping and praying it doesn't go to their stop loss or it doesn't go to their take profit. What you have here is a system that fixes a problem, but it doesn't fix everything. So, right, some trades will lose. This methodology is not rocket science. It takes practice and it takes a little bit of mathematical skills. Like you have to have the idea between, you know, uh, a scale, a left and a right, you know, a balance. And then you're just shifting your weight from one side of the balance to the other side. You're either bullish or you're bearish. And that shift, it doesn't have to be on and off. It doesn't have to be one or the other. There's times when you can almost be both, or you can be both the bear and the bull. And we don't want to do that, right? We want to pick the dominant one. We want to pick the most likely and then stick to that side for your 2 or 3 hours, right? You don't want to go beyond what the market is capable, willing, and more than likely able to do. And that's the piece that gets us into trouble, right? We want to go to the moon, but it only moves 60 pips a day. And that 60 pips is not in a straight line, right? It's back and forth, back and forth, back and forth. And so depending on where in that back and forth you take your trade, you're either in trouble or you're in the money. And this is what we're learning to do, right? We're learning to sell at the tops of the back and forth and buy at the bottoms of the back and forth. So, yeah, the problem is when things go amok, right? What do I do? What do I do? What do I do? Well, first thing to consider is take the loss, right? Do you want to take the loss or you want to fight for it? If you want to fight for it, there's a solution that costs money. It's never going to be a free exit. I don't think I have anybody else on the schedule. So let's see. Maybe we can do run a 2-hour session and close these trades, hopefully in profit. Where's my calendar? Calendar. Yeah, I'm free until another hour, so let's stay online. We'll walk our way through these trades here. Okay, so as according to this, I have 8 trades left. I'm coming out of box number 3. And so I'm going to have to wait for some of these box 2 trades to close on their own. Still so slow. Typical Friday. There's going to be, I think is it next week? Options expiry. So uh, the the markets will uh, find a level where complacency is kind of agreed upon, and then it'll blast from there. It's like the very tip of a triangle, right? And as we speak, when we're consolidating like this, it kind of gives you that feeling that we're winding up a spring, right? We're getting ready to bust a move one way or the other, and we're just trying to figure out what are the probabilities of one side versus the opposite side. And then the bigger picture comes into play, right? What's going to push or pull on the euro one way versus the other. And then when we go back and look at the week's event, the French CPI that came out, the German CPI that came out, the US, all of the news events that are on the calendar are not helping the euro situation. And by the same token, the US is also kind of slipping, but it's not slipping at the same rate. And that's where the problem lies, right? That's where the rub is. We have to trade that correlation as we see it. And on a day like today, the US is holding ground and the euro is pushing against it, right? So let's go to the Dixie for a quick look, right? The dollar is holding its ground, right? We haven't gone anywhere in the last 4 hour candle, right? We haven't gone anywhere, but the euro has, right? The euro's been moving over the last hours. And so it's limited also. It's found its lid. Maybe this is it, right? Maybe this is it. We won't know until we see the next hour or so. And then the next hour, what do we have? We have the bankers close, right? Right here, right now, we should be experiencing the UK fix, right? As we speak, top of the hour. And so typically right here, right now, we have slightly bigger bars than what we've been experiencing. Something like that right here, right? That green bar is very likely a result of the UK fix. And then the next few bars thereafter, right? It's just one event, one little link in the chain of events, but it's one that we know exists, and it exists on all sessions, right? There's a fix in Asia, there's a fix in Europe, which is it right here, and there's a fix in the American session. Right? So situationally, we're faced with the similar outcome every day. It depends on how you approach it. We want to be buying bottoms, selling tops, and sometimes you're doing it within the range, right? So it's a range within the range. Contrary to popular belief, it the trend's not always your friend. And you can see that clearly when it's like today, apparently a bullish daily trend, but I'm making my money on the downside. Right. So the problem is with our expectations. We are trying to chase a rabbit that won't get caught. You'll never be able to catch that rabbit, right? You're going to catch your own tail instead. So might as well profit from that behavior, right? I profit from making 3 pips, 3 pips, 3 pips instead of trying to chase 30 pips. Staying in the game is the name of the game. Right. If you're trading throughout, well, it's my nighttime, but if you're trading in the European session, you would have been buying support. All right. So going into the European session, it's selling resistance. Once you find that support area and it holds, which it did, you must buy support. Right here, we're at resistance, which was highlighted in the chat for a couple days now, and that seems to be holding. And so on the way up, in the upper half of the range, I've been selling, 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 right? In the upper half of the range, I've been selling, 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 not in the bottom half. Everything has to be taken in slices. Our brain wants this trend to go somewhere. It may end up, but it's not going to go there in a straight line. So we have to make money with the zigzags. Right. So we're down to 7 trades. So if I can get a green candle, I'll reopen it. There's my green candle. I'll reopen my trade. All right. So because I have 2 boxes there, I want to have 8 trades, recycling, or if I can, 4 in the upper box, 4 in the lower box. Right. So the strategy will work, and we will lose when it slips out of, off of the right shoulder of the bell curve. The loss is not irrecoverable. We can make that back. It's in our brain. When we hold on to that loss, we create more losses. I'm not changing my bias. I'm changing how I execute towards that bias. And sometimes the market just throws you for a loop, and now you're forced to lose. And other times it's just one little extra box or one extra pip, and you're forced to lose, right? But it's because I made that deal with the devil, right? I refuse to lose more than 36. So I have to lose that 36. Otherwise, I fail at this business. So it's a commitment I made, right? I choose to lose nothing more than 36, ever, 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 ever. And so I control the loss. On the flip side of that, it's my job to put in as many of these 3-pip trades as I possibly can and recycle them. Right? So it's this balance between the left brain and the right brain, right? Half of me is trying to execute trades. The other half of me is trying to protect the money and deal with the losers. It's 2 jobs, right? There's a trader and there's a risk manager. And then in the middle there's the market. Right. So we don't have much further to go. Sorry, still 8 pips. Very doable. And it's because we pace ourselves, because we did not, go crazy clicking everything away. This is survivable, right? 4 boxes is survivable. And I did not try to sell the breakdown here. I've been selling resistance on the way up because I expect the break to eventually happen with or without me, right? And so I'm not trying to chase the breakdown. I'm going to build for the breakdown, right? If I'm wrong, then I built all of this for a breakup. And if it's the breakup that comes first, I will close 1 box at a time until I'm out of trades. And by then I will have lost 4% of my account. Right? So do I really want to lose 4%? No, I'm going to fight for break even. All right, here's box number 2. I have 1 click to put, so I'll put it right there. I missed the green candle by a blink. Right? My whole job, my whole 2 hours is spent managing the outcome. Right? How the trades that don't work need help. That's where I come in. Everything else is closed by itself. I'm not interfering with the winning trades. Right? So a break above the current high up here would probably, uh, take out stops, like we said earlier, wreak havoc for a lot of people, trigger a lot of trades to go long. It's all about supply and demand. That volatility chases this supply and demand, right? That's what its job is, fill those trades. So any kind of a limit order or pending order of some kind, job of the market is to go there and fill it. And if the price is right, man, you know, it will go there immediately. Okay? So I have my 8 trades in my 2 boxes. I'm not in a position to click anymore. Let's see. I think the speeches have already taken place. We were expecting Friday, yeah. Collins, yeah, that's done. That's done. Everything's done. We're just waiting for oil news, and that's later on today. Okay, if we can get back into box number 3 here, my box number 3, I'll put money there. If the market pushes beyond my box number 3, so into my box number 4 up there, that happens to be the 5th box from the bottom, right? That's bigger than an average range. That's where the risk is. Right? Looking here on the 1 hour chart, there's a nice sign of rejection here, right? If we can hold the high, so if we can hold this high, if we go down to a 5 minutes, yeah, 5 minutes. Rebuild the ladder at this new zone there. And then the ladder will give you your action points, your train of thought. Am I breaking this line and going higher, or am I breaking this bottom one and going lower? Right? This is kind of what you have to ask yourself. And then it's this repetition. You keep asking yourself. You keep executing on what you perceive to be the weather, right? You're trading what you see in it out the window. And for us, the window is this box. Right? We're not trying to trade the weather into next week. We just want to trade the facts as they are right here, right now. I'll take a trade there. Right? Box number 3, I put 1. If it pushes up just a little bit more, like so, I'll put 2. And I'm slowly bringing up my average. Right? The white line is slowly bringing up. Now, the time will become an issue, right? If we start looking towards the clock and we see I'm running out of time, and it's a Friday and so on and so forth, and we've built this whole big position for a bunch of shorts and stuff, how do we deal with this, right? So there's alternatives out there. You can go flat and lose the money that you've put on, right? Lose the money that you put to work. Or you can lose some of it, not all of it, reduce the risk, not eliminate the risk. And you can also hedge, right? Which is something we'll probably get into eventually. And over time, you develop these skills to fix the issues. It's not that you don't want the issues, you try to not get into them in the first place. But if you're forced into this, into the wrong spot, you'll have the skills to fight and find a way out. The way out is the key, right? Everybody else is hoping they don't have to go to the stop loss. We will find an alternative, like an insurance company, finds an alternative before they pay you what they owe you. So, yeah, the problem will be our brain running away. It's like a runaway train, right? When we see this market moving opposite to my cells, my brain is tempted to just take off with this and it's the end of the world. I have to restrain that, right? I have to contain that based on statistics and probabilities. I have to keep reminding myself the likelihood of this running away is unlikely, right? It's more probable that something else will happen. And I'm dealing with that probability as I see fit within the model, within 4 boxes, within risk allocations. I'm trying to not blow the limits and just follow the rules. Okay. So, yeah, this is it's a fun environment to trade in, like this kind of stuff here, the sideways ranges, because it highlights exactly what we're here for, right? Anybody that's trying to chase the trend may or may not have had success here, right? But then they're probably looking for a much, much, much bigger trend, a much, much, like, this is not a trend for a trend trader, right? This might be a trend for a trend trader, but a trend is what you see on the daily chart, right? A trend is what you see on the weekly chart. Like stuff like this, that's a trend, right? That's a trend. That's a trend, right? But we're not trading the trend. We are not trend traders. We trade the range, we trade the facts. And even on that big candle there, we did not trade the trend. We traded the facts, which were down here, which, right? And that's the thing. The trouble will come. We have to learn to avoid it. We have to learn to see it coming and then prepare, batten down the hatches. Do what you need to do to stay alive. It's recognizing the weather, recognizing the storm is coming, having plan B, having an alternative. We're booking trades, we're closing trades, we're making money. Things are working favorably. No complaints from my. There's always uh, there's always the unknown, and then because you have your plan B, even that sometimes doesn't fit with the unknown, and so you create plan C and you create plan D, and eventually you run out of money or you lose. There's no two ways about it, right? There's no way that we can win all of the time. It's just that's facts. So learn to lose, my friend, and you'll do well. When we're exploiting these types of statistics, we're really exploiting people's emotions, right? They're afraid at the extremes, and we take our best trades at those extremes, right? So in this particular account, I'm really attempting to not have runners. Like I don't want to have two systems running at the same time. This is all about 3 pips, 3 pips, 3 pips, 3 pips, 3 pips, and the management of 3 pips, right? It's all about learning the actual strategy with the boxes and stuff. No outside help or outside assistance, to grow the account. This will teach us behavior adjustment. It's an assessment of ourself, right? And then how we behave, how we need to adjust, what we need to adjust, and then over time you implement those adjustments and you see the results. It will never be instant. And I think for me that's what has me captivated. I keep coming back because I keep finding new stuff about myself. Stuff I wish I'd known before. And so I still have my 8 trades in my 2 boxes, right? I have nothing in box down here. I have nothing in this box up there. And so I have 8 clicks in these 2 boxes. And if one closes, I'll recycle it. What have we done so far? We're at 23. All right, so we give about 1/5 of our money to the broker. We just made 2 more trades, so we're at 25. Excellent. So that gives me the opportunity to reopen 2 more clicks. So if it pushes up like it just did right there, expensive. And one more, boom, just like that. So I just recycled those 2 trades and I jumped the gun. See, the green candle I was looking for is right there. Oh well. Right? Live and learn. That's what we do. Right in this area here, right? If you have a click to spare, if you have 1 or 2 clicks to spare, this is where you put them. Right in this zone right there. Right? We just want to be able to keep coming back tomorrow and the day after and the day after and the day after. So in order to do that, we need to lose very little when we do lose. And so we're going to use microscopic size and we're going to make a lot of assumptions. Right? So instead of having one big fat trade and one big bad decision, we're going to have many small trades and many opportunities to make good decisions. So it's all about the flip side of the same coin. So I can just remove that line. It's annoying me. Right, I spent my clicks. I'm just waiting now to see them close. And if we go up into box number 3, which I'm ready for, I'll be willing, able, capable, and I have the money to spend, I will put it there, right? I will try and move that white line closer to my break even, right? This white line is a gauge of where, how much drawdown I'm carrying, right? I'm carrying this much drawdown, that much space is moving against me right now, right? 1 box. And so it's this idea that I'm measuring the environment and I'm aware of what I'm up against. If I can move that line, it raises the probabilities of success. Right? If I push that line away, it will take further to get there. Right around 10 o'clock, top of the hour, that's highly likely when we'll see the big push like we always do. Right? And I wouldn't put it past the market that we push higher, and then we finish the week right around the 880. So if we do break higher and then have that pullback that we would expect, the pullback after the push, right? So I'm thinking out loud. This right here, push higher, right? And then what if we come back and close the day at the breakout, right? Come back and close the day at the breakout. I wouldn't put it past the market to do something like that, right? Destroy everybody just before the weekend. And this is the kind of stuff you prepare for, right? You plan B, plan C, right? You have all these alternatives and you have to look over your shoulder, right? We don't know what's next. We have an idea based on the calendar, but there's always people doing stuff with a purpose, right? They're buying or selling because they have a need to. If I can get in here, I'll Click. I have $8 a drawdown on a $1,000 account. That's not bad. Waiting is the hardest part. Are you guys in the chat there making pips okay? Everybody's so quiet. I'm the only one speaking. Yeah, there we go. Coming back. Right. Playing the ranges is life changing. Once you understand that there's a limit above you and a limit below you, to me that brought with that safety. And then learning how to operate within these limits was the next thing, right? So when I was trying to catch the trade, it was quite the opposite, right? I was hoping to not have fear of missing out, which I did. I was hoping to hold on to something for a long time, which I couldn't do. And I was hoping to be right more than I was wrong, which never happened. And so now, even when I'm wrong, I can still make a couple of pips here and there and learn and earn how to fix it. Like earn the right to fix this stuff instead of, oh man, I'm a loser again. Right? I would rather get involved. Try to make things better for myself than let somebody else do it for me, which in this case I know the market never will. Right? So I'm not hoping that the market is my friend. Like, why won't I eat the lion? Because the lion did not eat me. Right? I will eat the lion. All right, so we're making our money. It looks like we might finish on time within our 2 hour window. We'll see. All right. We're not trying to make $1 million. We're not trying to make a million pips. We're just trying to do our average potential average yield. So I'm trying to get flat, within my 2 hour business window. And if I need to work a couple of minutes of overtime, so be it. But I don't like to go there, right? I would rather be flat with a tiny, tiny loss and enjoy the beach instead of working hours extra for pennies on the dollar. All right, so what are we at now? 27 trades. So far the account is moving in the right direction. Right, what are we at the pips? We're at 80 pips, 85 pips. So that's about 3 days of work on our spreadsheet without even realizing it. Right, we're making pips with micro lots. The spreadsheet asks that you create 20 pips with one mini lot. So that requires we do that with 10 of our trades. There's no reason to be quiet. It's all good. We're faced with different markets because of geography and time of day, and there's a purpose for the euro to serve the European market, right? Whereas in the North American session, the purpose for the euro is very diminished, and so it's an adjustment, right? You have to appreciate the fact that in North America, the euro has competition, and so it's usually going to be a lot more restricted. The ranges will be contained, whereas in the European session, it's like a runaway train more often than not, right? So it's this balance between the two. And then if you trade multiple sessions or if you straddle sessions, like what I'm doing, right, 8 to 10, I'm combining Europeans with the Americans, right? And so I'm exploiting the volatility. I'm making sure there's going to be enough of a swing in either direction that I can make money with. And so I'm not here for the trend. I'm not here for the European session, right? I'm here for the extremes of the daily candle. And it's situationally that allows me to sleep 8 hours a day and I get up in the normal time. Right? I don't have to get up in the wee hours of the morning to do 10 minutes of work. And so going back to the dollar index very quickly, right? Just in time for the banker's close. It looks like that support might be holding. Right? We will see in the next 30 minutes if we bounce off of here or if we break below here, right? If we break below here, the euro's going up. If we bounce off of here, the euro's going down, right? So let's see what happens in 30 minutes. Right? So everybody will say, well, why aren't we making money on the way up? Why aren't we buying support, 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 support? You're free to do that. Go right ahead. Right? I'm not here to interfere with that. I'm here to tell you that we're already near the top and the probabilities of it going higher are a lot lower than the probabilities that it will finish the day lower, right? So I'm just playing the probabilities that it will finish the day away from the top, not at the top, right? So it's because of where I come in, right? At my 8 a.m., there's already 16 hours of the daily candle finished. And so when I walked up to the computer this morning, oh, awesome, fantastic. When I come up to the computer this morning, we had made the low in the European session right here. We had made the high in the North American session. We just did now. This is where I came this morning, but this is where we are now. And I think we're going back towards the low, right? And so it's situational. If I was to have come, at 2 a.m. my time, I would have probably been bullish, right? Because we're making higher highs, higher lows. We found the bottom, we tested support, and we bounced off of support. My whole premise this morning was to find resistance. I've been mentioning that in the chat room, right? Sell resistance, sell resistance, sell resistance. I want to be selling resistance. I want to be selling the top of this range right here. Right? That's been my goal. That was my goal 2 days ago. It was my goal today. And as long as we're consolidating and not breaking down, there's a probability that we go up. And that's where the risk lies, right? That probability is there unless we prove otherwise. And so we must take that chance right up to the line and then know where we're wrong. Accept the fact that we may be wrong and then live with that fact, right? Those of us that fight long enough to talk about it, it's because you committed to the fight. You committed to survival and you found a way out. This is what we do. We are in our brain, this entrepreneurial mindset that we have. We wake up every day to fight fires. We wake up every day to find solutions to problems that we don't even know we're going to have yet. While the other half of the world doesn't care to do that, right? They care to just sit on the couch, eat crisps or potato chips or Pringles or whatever, and they hope that today it won't repeat yesterday. We make sure that today won't repeat our yesterday because we create our tomorrow. Right? And so it's in our brain, right? Our brain is looking forward where everybody else's brain is wondering about yesterday. And we fall for that sometimes when we take a loss, right? You book a loss and you fall, you go back into your old self. It's like, oh, I'm such an idiot. I'm such a loser. It's all my fault, blah, 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 blah. It may be, but it's more likely that the market tricked you and you didn't see it coming. And so your job is to learn those tricks, see them coming, appreciate the fact that you're here to get screwed over, and then just learn how not to. It's a, I'm a willing participant, even though the market is rigged, right? I'm a willing participant. And it's not rigged in a mean way and in a legal way. It's just packed full of professionals out to get you. Be willing, right? So once you understand what happens with the psychology of the loss and getting back on the horse and how immediate that sensation is, like I'm a winner again, oh man, you're going to be unstoppable because now the losses won't mean a thing. You'll be able to pull these winners, like I'm doing here, over and over and over and over to overwhelm your losses. And the ones that you're seeing right now, the losses that you're experiencing today, will become fewer and fewer and fewer and fewer and fewer over time. They'll never disappear entirely, but you're going to get a lot less of them because you're becoming a better trader, right? And so it's this idea that I'm here to practice, you know, and I just don't know what I'm practicing today. I have my toolbox. Give me a problem, and I'll try and fix it. Sometimes I'm good at it. Sometimes I suck at it, and over time, I'm becoming way better, and so can you. This 2 hours per day, it's not to stop your education, it's to stop you from losing. Right? It's to help your education, it's to promote your success. You have to commit to the stopping of trading. And if you do multiple 2 hour sessions per day, the process requires that you repeat the entire process for each one of those sessions, right? You can't just skip the top down analysis because you did it 6 hours ago. No, you have to redo each of the steps. And then every time you redo those steps, you may get a different answer. Oh, now that changes everything. And this is what we're here for. We're the most adaptable creatures. This job here forces you to be a different person every day. And you're trying to be in that mold. You're trying to be in that monk mindset. Right? You don't want to be pushed around. You don't want to get bullied by the market. You're also not the one doing the bullying. You just want to do your job. And this is where we benefit, right? Our psychology benefits from slow, steady growth. No pushing, no shoving, no screaming, no kicking the neighbor's dog. Right? It's all about safety of capital, not about millions of dollars. All right, so here we are still approaching our target. We have 20 minutes to go before our 2 hours is up. The surviving, once you've done this once, a couple of times, once you've lived through a bad day and you can talk about it, you didn't blow up your account, you'll be so proud, right? You'll be able to repeat that because of your psychology, right? Because you did it once, you'll be able to do it over and over and over again. Until you put that money in boxes 3 and 4, you won't have that feeling. You won't know what it's like to come out of a mess with little to no loss. And that is what makes that feeling right there is what makes us unsurpassable. Like it's there's nothing that can stop you once you know how to fix your own problems. An average Joe learning to trade, average swing traders, they don't have that alternative, right? They're trained to take one trade and wait for that one trade to pay off or to lose. They don't interfere with that one trade. To a matter of fact, they're so busy looking for another trade somewhere else, right? Just because they were told to not interfere with that one trade. We do quite the opposite, right? We don't look at 10 different markets. We have one market and we look at placing 10 trades on it. And so it's a different mindset. It's not swing trading, it's not trend trading, right? This is range trading. It's a one of a kind thing, and nobody out there does this. That's how you came to find me. Right? So it's this idea that we have to forget the old way of doing things. We have to forget trend trading, right? It may come into play years from now in your future self, but it's not going to happen in today's self, right? In today's self, you're learning how to trade ranges. You need to limit yourself to a floor and a ceiling and then behave according to that floor and that ceiling. It's a mindset shift. Once you've figured out how to operate within this box, within this envelope of risk, man, oh man, upside is unlimited. Right? But right now, we're so busy trying to chase that money that we forget that how not to lose. We forget that, the money will disappear if you don't manage it. So, yeah, opening the trade, simple, simple, simple. Closing the trade, simple, simple, simple. Managing those trades, right? When things don't work well, managing the position. That's where the skill is, right? That's what you're learning to do. And you have not learned that overnight. You're trying and trying and trying, and you're trying every day. Every day you're getting a little bit better. You're moving towards your goal. It's not gonna just one day, shine a big neon light says you're here. You will, graduate into this. It's not that I make mistakes if I start before. It's the model is needs to be adjusted, right? If you look at this the circadian rhythm that I posted multiple times, I specifically trade one piece of that circadian rhythm, right? If you look at it, I played the bull or the bear pullback. That forces me to be within 3 to 4 boxes, basically daily, right? It's a pullback. If I start before the pullback, I may end up honing 5 or 6 or 7 boxes. If I start after, so if I come after lunchtime, I'm wasting my time. So it's this idea that I have to localize myself on that 2 hour window to be as efficient as I possibly can. If I start a little bit before, I'm opening the opportunity for error. It's not me making the error, it's the time and the size of the bars and stuff working against me. I am making the mistake of starting too early, but the market is not my friend then, right? If I start on schedule, the probabilities are in my favor that things will finish in my favor. Right? Before my 8 o'clock time, it tends to be that trend behavior that's unfolding. And I don't want to get caught in that trend behavior, right? I don't want to be the one thinking it's going to the moon and when it's actually going make a lower low. So yeah, you'll see me in the chat room all the time. I'm posting stuff, at 5:30 my time. I post stuff 3 hours before my start, right? I have, like I said, multiple accounts. I'm doing stuff all day long for different purposes, different reasons. What I show you here, what I teach you here is one way of making money. That's it. There's a million of them out there. I'm only showing you one. And then with that, I hope you take bits and pieces and introduce that into whatever it is you're currently doing. Right? So this is not the only way to get rich. This is one way of generating rewards, cash flow, because we don't care for the risk to reward ratio, right? The ratio itself is the bullshit. Get rid of that ratio, focus on the reward, and manage the risk. That's your solution. And so by focusing on the reward, I need to focus on time of day, because if I start too early, that reward, I'm giving it back. Oh, yes. Oh, yeah. Trillions. It's for as many brain cells as you can have a mistake. So yeah, I don't know how much money I've lost before turning things around. Like literally, I lost track, and I was kind of devoted to the art at that point. And I know for a fact I made it back. Just my lifestyle tells me, but it took a while. It did not happen overnight. And it's this thing with trading, we want it all now. And in fact, you go 5, 10, 20 years as a hobbyist earning nothing. And then once that string of light turns on, all of a sudden that money all comes coming back. And now you have to manage money. It's an education. And depending on your upbringing, if you were born with a silver spoon in your mouth, losses may mean something very different to you, right? And so that's where we will experience problems, the execution, right? We're afraid, it's this, I got my finger on the button, but I can't bring myself to press it, right? You have to press the button. And once you're in that trade, all of a sudden it's a flood of emotions, right? And then if it works, oh man, fantastic. But as soon as you see a little bit of red, that flood of emotion is causing you a ton of grief, and it will mess up with your ability to do the right thing. And so with a little bit of practice and the security blanket, the box, doing the right thing on the edges of the box becomes easier and easier and easier and easier. It becomes almost second nature, right? You're no longer worried about coming out ahead. I just want to come out, right? Break even is good enough for me, right? Everybody else does not care for break even. They must get their 2 or they will lose their 1. And the market takes their 1 almost 90% of the time. Right? So this is the problem we will have. We need to look inward. We are mean reverting traders. We go back towards the center of the range. Like right here, right now, we are back towards the center of the range. Right? We were at the extremes a minute ago. 3 hours ago, we were at the low. And now we're back towards the middle. Right? That's what we do. That's what we do. We are mean reverting traders. Right? I tried to be a trend trader, and it got me killed. It got you killed. That's why you came to find me. Right? Our psychology requires that we look inward on the swings instead of outward on the swings, right? We're not trying to go to the moon. We're trying to come back to where we came from. Right? The trend trader will buy at 104 because it's going to 105. The mean reverting trader will sell at 105 because he thinks it's going back to 104. Right? There's nothing wrong with the 2 approaches. It's just those are the only 2 approaches we have. Pick one. I picked the wrong one for 10 years. And that just failed. It failed miserably. It never worked for me until I discovered this. And this now works for me daily. And once in a while, I'll throw in a swing trade. Once in a while, I'll throw in runners. Once in a while, I venture out of my comfort zone. But I always default back to this, my one way of making money out of trillions. This is what works for our psychology, not for my wallet. It supplements my wallet, but it definitely does not create losses like the other strategies did. Right? It's my mind that's able to operate this. 2 minutes to go, and it's moving in the wrong direction. Darn it. I only need 4 pips. I'm going to let you guys go. Hold on to those trades. I will leave these trades open, untouched, and take a note of this right here. All right, we've reached our $20 in the account. How many trades do we have right now? We have 29 trades, and I think we have 4 on the books. So we should come back with 33 trades, and we will be restarting on Monday, having completed 33 trades. So yay! Yep. Yeah, mean reverting. That's the key, and it works for some of us, and it doesn't work for all of us, right? So, if you just cannot wrap your head around what we're doing here, you're probably a trend trader. You probably have better success thinking outside the box, looking outside the box, looking at hours into the future, where I'm incapable of doing that. I'm wrong the further out I look. And so I'm better off looking closer to me, 1 hour into the future, not 1 day into the future. Right? My top-down analysis begins on the daily chart, and I'm only looking at 2 candles. Right? The trend trader will look at the daily chart, but he's looking at all the candles. Very, very different approach. Right? It has a different purpose. So our purpose, my purpose, is to generate cash flow every day, 3 pips at a time. Right? Considering it's $1,000 account, having made $20, we're pretty darn good. Right? A lot of people have lost a portion of that $1,000 on day 2. Okay, so hold on to your hats, ladies and gents, man. This is going to change, and it's happening with our involvement, right? It's not happening against us. It's happening because of us. So, yeah, you're learning. You just have to learn how to lose, and we'll learn that together. Talk to you guys later. Enjoy your weekends. Bye bye.